Hello guys, it's James from FXAX here, and today we are going to be covering the RSI indicator and why we believe this is the best momentum indicator for any trader to have on their charts. We will be expanding on this topic in future videos, introducing other types of indicators and their uses to help you become better traders. So be sure to stay tuned for those. If you are new to the channel, welcome. We provide transparent, informative Forex content without the BS. Before we begin, a disclaimer for you. Forex trading carries a high level of risk to your capital, and you should only trade with money you can afford to lose. And remember, the content we produce is for educational purposes only. We have also marked timestamps on the video to help you guys navigate to different parts of the video if you so please. However, we do advise you to watch the entirety of the video. If you do like this video, please do like, comment, and subscribe. It'll help us provide you with the content you genuinely want and help us with those YouTube algorithms. Okay, so what exactly is the RSI? RSI stands for Relative Strength Index. The Relative Strength Index was developed by J. Wells Wilder, who is often considered the father of technical analysis indicators, as he also developed the wildly popular indicators the ATR, or Average True Range, and ADX, or Average Directional Index, and the Parabolic SAR. The RSI measures the speed and change of price movements. The RSI oscillates between the levels of 0 and 100, and the middle line at the 50. Traditionally, the RSI will come with the levels of 70 and 30 marked on the chart, as these are often considered the overbought and oversold levels. For more conservative traders, if you are making entry decisions off of these overbought and oversold levels, you can change these to 80 and 20 for less false signals, as price will need to travel to pretty extreme levels to break over the 80 or below the 20, giving traders more confidence that the price is extremely overbought or extremely oversold, and likely to reverse soon. The reason why I love the RSI is because it really is like the Swiss Army knife of indicators. There are many single ways that traders use the RSI. Some traders use it to place reversal trades when price reaches the overbought and oversold areas. Some people use a 50-line cross as an entry signal. Some people use it as a trend indicator, with above 50 showing an uptrend, while below 50 shows a downtrend. Some people will identify major areas of support and resistance areas, or draw trend lines on the RSI itself. And finally, some traders will use it to spot divergence and hidden divergences. The RSI is the most popular indicator that traders will use to spot divergences, but with all the use cases we mentioned, there is no other indicator that is as multifunctional as the good old faithful RSI. While there are a lot of traders who may use the RSI for one or two of these functions, we are going to show you guys today how to use it for every one of those uses. The more ways a trader can leverage one tool, the stronger trader they will be in any scenario. By knowing how to use the RSI in all these different ways to identify multiple trade setups on any chart and any time frame, this is going to save you guys time switching between other indicators or swapping through different time frames or pairs, as you will have a better chance of finding a trade somewhere quickly by knowing all the different ways the RSI can help highlight your trade setups. Choosing the RSI, as it can help highlight so many potential trade setups, is sort of like choosing the engineering workhorse type character in your favorite video game. You know, the guy who carries all the gear? You might not need half the stuff in their inventory, but if you ever do need it, you're glad it's there. For any of you guys who like math and are curious about how the RSI is calculated, you can see the formula here. But I am not going to go into details about the calculations because, to be honest, I don't really care about the math. I just like the indicator and I know that it works if you know how to use it correctly. So how do you use it correctly then? A lot of traders will use the overbought or oversold areas of the RSI to show when price is likely to reverse. The idea with overbought and oversold areas is that traders feel that price has moved so fast and so far away from the average median price in order to reach these extreme levels that a reversal is imminent, and price is going to reverse soon. So, if price reaches overbought, the theory is that so many traders bought so quickly that pushed the RSI to be in this overbought zone, that surely the buyers must be exhausted and cannot push the price higher. Now, the sellers can take over, pushing the price back down, and vice versa for oversold. So let's look at some trade examples of how traders will use this as an extra confluence in getting some sniper entries on reversal trades and pinpoint exactly where price is going to change directions. Here we can see on one chart we had 3 beautiful buy trades we could have placed after we saw price rejected off the support level and the RSI reached oversold 3 times. A trader using this strategy definitely would have taken some pips from the market. Note that everything covered in this video works for any currency pair, crypto, and time frame. Combining these strategies and mastering them will make you a better trader on any chart. It is also important to understand that every trade setup shown here is combining both the indicator with key levels on a chart and price action. Understanding support and resistance and price action are vital for being a successful trader. We will cover those topics more in depth in other videos. Here is an example of 2 winning sell trades. When the support level broke, it became resistance, and price rejected from that level at the same time the RSI hit the overbought levels, showing that price was likely to drop, which exactly what it did. Trade number 2 would have had a bit of drawdown, but as long as you used proper risk management and placed the stop loss accordingly, it would have turned into a great winning trade. Here are a few more examples. Here we have the 1 hourly chart, 1 winning sell trade, and 3 winning buy trades. That is a hell of a good trading week and a lot of pips for just 1 pair and 1 time frame. Started to see the power of the RSI yet? Here are some great examples of using overbought and oversold levels with other key levels such as a beautiful Fibonacci retracement level here and here. Some traders will focus on the 50 line cross instead of the overbought or oversold areas. The theory here is that the RSI can also be used as a trend indicator. If the RSI is above 50, we are in an uptrend. Below the 50 is a downtrend. Many strategies use the line crossing the 50 as a signal to enter their buy or sell trade. Here are some examples of how that would look when combined with major areas on the chart. In this example, the trader would have waited for price to reject off the trend line and entered their trade once the RSI crossed the 50 line, resulting in a really nice trade. Here is a sell example trading off a trend line. We can see the price rejected off the trend line and the trader could have entered a sell at the 50 line cross on the RSI for another great trade. Here is how this would look using a resistance area. Each time price rejected off the resistance level, the RSI crossing the 50 line acted as a confirmation that price is heading in that direction. Here is a buy example showing 5 possible entries resulting in an absolutely monstrous move. Any trader would have been pumped to add these pips to their bag. Here is how this 50 line cross can be used with fib levels for a sell trade. When price rejected off the fib level, entry can be made when the RSI crosses the 50, or even when the RSI rejects off of the 50 line to push back lower. Here is how it looks for a buy example. Another way traders use the RSI is to find major areas on the indicator itself, just as traders draw areas of support and resistance or trend lines on the main chart. A great use for the RSI is also marking out these areas on the RSI and matching that with price on the chart. This just gives traders yet another confluence, with the RSI giving another confirmation that price is likely to react in the way that they have predicted with their technical analysis. Here we can see that price rejected off of a support level, forming a double bottom on the main chart. The RSI formed the same pattern, showing a rejection off a support line, forming the same double bottom on the oscillator, resulting in a huge winning buy trade. Here is a sell example. Price rejected off a strong resistance area, and the RSI formed a double top at the same time, rejecting off the level on both the main chart and the oscillator. This is a trade setup that most traders would take any time they see it, as these two matching in conjunction often leads to big wins. The same method can be used with trend lines as well. Here is a nice sell trade as both price and the RSI rejected off the trend lines. And finally, this brings us to what many traders consider the most useful purpose of an indicator, and that is spotting divergences. Now, teaching divergence is outside the scope of this video. Stay tuned for future videos where we will be covering what divergence is more in depth. But we are covering it here as the RSI is the main indicator used by most divergence traders. While nearly any oscillator indicator such as stochastics or the MACD can be used for divergence trading, most traders opt to use the RSI for their trade setups. Divergence is a case where the price of a pair is moving opposite to the direction of the indicator. This can be very valuable to be able to identify, as divergence is often an early warning sign of a major price move about to happen. Here are some examples where we see divergence appear right before some big moves. If divergence traders would have gotten in on these moves, they definitely would have been smashing those pips. Here are two sell examples of where bearish divergence was indicated at a resistance level. This shows the power of spotting divergences. Notice the massive drops that happened shortly after divergence was identified. A very valuable predictor technique. Here are two examples of buy trades using RSI divergence. Trade number 1 shows bullish divergence off a support area, and trade number 2 shows bullish divergence off the trend line. This example really shows the diversity and multi-uses of the RSI to find some divergence trade setups that are really going to bulk those trading accounts. Here we are using RSI divergence with Fibonacci levels, and a sell example. Here is another great example showing combining uses with the RSI for some killer trades. Here we have price rejecting off a strong resistance level on the main chart and the RSI showing a double top rejecting off a resistance level on the RSI and bearish divergence. These are three really strong signals that this price is about to drop, and anyone who placed a sell at this level definitely fared well. This brings us to our FXAX tip. And this one comes courtesy of TradingView charting platform. This one is a real lifesaver, as when you are first starting out, it can take a lot of time to gain the skills to quickly and easily identify areas of divergence on the chart. Or, if you're just lazy like me, I find trying to manually find divergence lines on a chart a straight up pain. I don't have time for that. Thankfully, there is a free indicator on TradingView simply called Divergence Indicator, which automatically highlights RSI divergences for you so you don't need to spend hours squinting at your screens trying to find levels of divergence. Using this indicator is a real time saver. And that's it for this video. I hope you guys learned something valuable here today, and you can take what we have shown you here and head to your own charts and scroll through historical price data to try and identify areas and setups like these on your own. The more time you put into mastering being able to find these setups, the more profitable your trading is going to be. Once you are comfortable identifying these setups on your charts, we always recommend demo testing this on practice accounts to build up your skills and confidence before trading with live funds. Please visit www.fxax.com and join our completely free Telegram. All socials are in the description below. Stay tuned for more content like this.